If you're thinking about building a property portfolio, whether it is from absolute scratch or you've got a couple of properties now, but you don't know what to do next, then this is the video for you. Now, in today's one, Simon and I are going to look at where you are, where you'd like to be longer term, and the path or the property steps to get there. Super excited to bring it to you. Man, I'm feeling like Nelly today. It's certainly getting hot in here where we're recording. I'm going to be a massive sweaty mess and Simon's going to be even worse. But if we kick this off, bro, let's talk about it. Now, step one is looking at where you are right now. So what would your thoughts be for someone just getting started around that?
Look, I think it's one of the most important steps of, figuring out what your property investment strategy and goals are going to be. And looking at where you're at right now is plain and simply, what's your lifestyle, what's your financial position looking like at the moment. It's assessing your income versus your expenses. It's looking at how much equity you may have in your principal place of residence or an investment property, or just the cash in the bank for that initial deposit.
Awesome, bro. So once you've figured out your income and expenses and gone and talked to your bank manager or your broker about where you are, the second step is really thinking about where you want to be in the future. So that might be 12 months from now and 15 years from now. How do people sort of figure that out?
Yeah, when I'm thinking about the long-term future, I always like to go long-term before I go short-term, because it makes it a lot easier to develop the short-term plans when you know an idea of where you want to be in the long-term future. So, we like to set a 15-year goal, because the reality of property investing is it is a long-term asset. Nothing's going to change overnight. So if you give yourself or the average Australian about 15 years, they should be able to achieve their goals. So you start there, and I think a really good starting point for a lot of people is, how can I replace $100,000 worth of passive income? That's going to give everybody a really awesome life if they can get to that level of passive income and financial freedom. And once you've got that long-term plan, it's really simple to just reverse engineer that back to what needs to happen next, which can be refined down to 3 simple steps. You're either buying the next property, saving up more cash for a deposit, or paying down debt on those properties as well.
So we now know where we are. We know where we want to be longer term, which is financially free with choices to spend time with the people we care about. When we go to this year or the next property, it really comes down to the property investment goals. Now, I've personally made so many mistakes around this, but luckily I've learned from them and I've obsessively looked at history. So what are some of the big rocks in terms of like a safer, lower risk approach to investing that we follow?
Yeah, I simplify it down to sort of comparing one option to another option. That simplifies that process, makes it a hell of a lot easier. So the first things first is the timeframes that you're looking at. For us, it's always going to be long term. It's very difficult to predict those short term movements. So we're looking at least a 15-year plan with our property investment portfolio. Then you're sort of looking into what you really want that property to do for you over that 15-year period. We like to focus on assets that are going to generate some nice, consistent capital growth over that 15-year period. And we also want to find a nice balance of cash flow. I don't really like the idea of losing money to make money. I understand that sometimes it's a reality when you are investing in property, but the idea over that 15 years is to pay down as much debt as you possibly can so you can get that cash flow working for you. And it's about looking at the markets. Are you looking in a major metro market? Are you looking in the major regional markets or smaller regional markets, and figuring out what is the best option for your strategy, both short and long term? Then we're looking at the asset itself, right? So you're looking at houses versus units versus townhouses. And for us, looking into some of that data, looking into the historic performance of these types of assets in Australia, we like the houses. It's the power is in the land, and we want to control as much of that land as we possibly can. And then, once you've identified that asset class, it's like, okay, well, what style of house are we looking for? Am I a more active investor and I want to get a bit of a renovator? Or am I more of the set and forget kind of guy and I just want to buy a nice tenant-ready, low-maintenance home? So they're all the different things that we're looking at. Man, I'm getting so hot over here. I regret not wearing a black t-shirt. I apologize for everybody watching this.
Bro, I was just watching that and that was just, man, like I was just following along and I'm like, yeah. So, once we've got the ideal property, and to add a few little pieces to that, once we've got to that granular level, quality suburb, close to the city or the beach, quiet street, quality pocket of the suburb as well. Nice big piece of land, either unrenovated or tenant ready. I used to love renovating, and now I honestly can't stand it. I'm like, had so many maintenance issues. Now I'm like, I just want it to be set and forget, nice and easy.
Good way to get started, right? You got to cut your teeth in the beginning.
I cut my teeth, man.
Now, you've been doing this for a long time, bro, over a decade now, and obviously there's some lessons throughout that journey. So what are the 3 biggest things that you've learned over the last decade with investing in property?
Man, I've learned so much. Like, I've read so much history. I feel like I'm about 3,000 years old right now in property years. But the biggest lesson that I've learned is timing. Now, the simplest way to understand this is, imagine you bought in Sydney in 2011 and it's 2022 now. Like, almost everybody has doubled their money. It's kind of like buying Brisbane right now and looking back at it in 15 years' time, or even, you know, buying other markets in Australia in the last couple of years. Like, some places have cranked. So if you can learn to understand timing, that's number one. If you're interested in this stuff, we've done heaps of other videos on it on our YouTube channel, podcasts on it as well, the Pumped on Property Show. You can also check out Phil Anderson's work, Fred Harrison's work, Ray Dalio's work too. The second one for me is building a team. Now, I've been stitched up by brokers, bank managers, solicitors, building and pest people, property managers, and pretty much everyone else, which is cool. But now I've got a team of people I trust that know way, way, way more than I do about my space. And I was looking at a Naval quote last night. He said, you're really only good as your team of advisors. And if you're trying to figure out the truth after listening to yourself, then hit up people in your community. I think that's powerful too. Hard to start with, but over time, just keep adding quality and value there. The third one is, I thought I'd be financially free when I started at 24 by the time I was 30. I'm 36 and I'm still not there yet. So it takes longer than I thought it would, and it's going to take longer than you think it will. But be patient. Trust that in 15 years, everything will change. And in 15 years, you're still going to be here. So why not be free? Why not have a passive income for life? And why not be living the best version of yourself?
Woo! That's a wrap.
That's a wrap.
Getting cool, bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that.
So nice, eh?
Oh.